So if you're not sure where to start for the trial balance, you can ask what's the first item? The trading account. Because the first financial statement you have to make is the trading account. All right. So what is the first item that goes on the trading account? You can look at your trial balance that's been sent to you. What is the first item in our trading account? Trading account for the Bwezani family. Yes, the sales. That's the first figure. For the year end. For the year ended, always be formal when you make these trading accounts. For the year ended, I think it was 2023, 31st December 2023. Yes, so the first item is sales. You put in the sales revenue. Here you're recording how much you made in revenue. So what's our figure for sales revenue? Refer to the trial balance given to you on the all right 100, which is here 116,674. What is the next item that we need to put here after sales? Return inwards. Yes, this is the goods that were brought back to you. And as I said, return inwards is a contra revenue account. As you can see here, it's reducing the sales value. How much is our return inwards? 1,210. All right. Mhm. Yes, colleagues, what value do we get? I hope you're writing this down on your papers because I'm putting it on the board just so that it's write down on your papers and then. All right. This is our net sales. All right. Or turnover. What's the next item in our trading account? We've already recorded how much we've made in sales revenue. So what do we need to now tabulate? The cost of goods sold. All right. This is the figure that we want. The cost of the goods sold. Once we determine the cost of the goods sold and we deduct that from our revenue, that gives us our gross profit. All right. Gross profit is basically sales minus cost of goods sold. So we are now tabulating our cost of goods sold. So what is the first item that comes? It's opening inventory, but in this case, in this question, we do not have opening inventory. All right. Opening inventory is the first that comes. And after opening inventory, that's when you bring in your purchases. All right. Yes. So put in purchases. What was our figure for purchases? 138,900. Yes. All right. We bought goods worth 138,900, right? 138,900. Yes. What next? Yes. So one thing I just want to illustrate. If we had opening inventory, all right, whenever you add opening inventory and purchases, it gives you the total cost of goods available for sale. Okay. Whenever you add opening inventory and purchases, it gives you the total cost of goods available for sale. So in this case here, since we only have purchases, so this is the total cost of goods available for sale. All right. Then yes, we deduct return outwards. Remember, return outwards contra expense. It reduces the purchases expense. How much was return outwards? 720. Return outwards 720. Okay. We subtract. Okay. Now, If we had closing inventory, if they give us information about closing inventory, we would have deducted the closing inventory figure from this amount that we've got. But since there's no closing inventory, so our cost of goods sold, sometimes written as COS or CGS. What was the figure again, Mr. Tapiwa? Yes, so this is the cost of goods sold. So to get your gross profit, it's sales revenue minus the cost of goods sold. What do we get? 115,464 minus 138,180. What's our gross profit? Yes, I believe it was a loss in this one. Let me check in my track. Yeah, I believe it was a loss. We made a loss in this one. Yes, it's a loss. All right. It's normal for a business to make a loss, Mr. Tapio. Mhm. Asa- Mm. So we are done with our trading account. Any questions? Next is our statement of profit or loss. All right. Do we have any forms of income? No forms of income. Okay, usually income, whenever you see it ends with the word received, then just know it's income, like rent received, commission received, discount received. All right. So since there's no income, any forms of income, we'll go straight to deducting our expenses. So we're going to say less expenses. So here you just list down all the expenses. Let's see what expenses do we have here. Rent, I mean, purchases has already been dealt with, so do not put it back, or you'll be committing an error. What expenses do we have, colleagues? Look at the trial balance. Salaries, yes. How much? Yes. Rent, yes. Stationery, that is correct. Any other expenses? Remember, whenever you're given a trial balance, just remember any forms of income, revenue, expenses, gains, or losses, they're all coming into the income statement. All right. The balance sheet is only dealing with assets, liabilities, and capital. So, revenues, expenses, any forms of income or any losses, they're found in the income statement. And the income statement is the combination of the trading account and the statement of profit or loss. So that's one of the guides you should use whenever in an exam if you've been given a trial balance. Yes, what's the amount for salaries? 7,900. Okay. Rent, stationery, it's in kwachas. We total up our expenses. We deduct this from our gross loss, negative 22,716 minus 10,990. Okay, do not ignore the negative sign. So we see our net loss. And that's why public limited companies are under pressure because they have to produce these summarized financial statements. And imagine you're a shareholder. Yes. So imagine you have made 3 years straight, you're just making losses. What do you think will happen with the shareholders? Those are pulling out now. Negative. Let's see, is that the same number I got with my statement? Yes. Yes. All right. Negative 33,706. Okay. So just a recap. The purpose of the trading account, which is here in green, is to get the gross profit. Then the purpose of the statement of profit or loss, which is here in yellow, is to get the net profit or net loss. These two combined are what we call the income statement. And the only accounts you're going to find in this income statement are revenue accounts, any other form of income accounts, and expenses. Nothing else. Assets and liabilities are found in the statement of financial position.